I'd like to welcome Paul Taylor, the President and CEO of Mortgage Professionals Canada, for our third episode of RiverRock. What do we call this again? Again, for agreeing to do this and joining us. My first question is going to be, how long have you been the President and CEO of Mortgage Professionals Canada?
Just over 5 years now. I think my anniversary was January the 11th.
Okay.
At the time, Jared Dreyer was chair, Mark was vice chair, and there was a few rounds of interview. The final sort of interview dinner, as it were, was Michael Beckett and Boris Bozic with Jared and Mark.
Oh, that must have been fun.
It was good, yeah.
Oh,
I think the plan was to just give me 3 drinks and see if I was still the same guy.
Oh, that was funny. That's very funny. What has been your biggest challenge in the role so far, would you say?
I think the membership themselves would probably say the government relations is what we should be spending our time focusing on. I was actually really fortunate in that the name had changed before I got there, and Mortgage Professionals Canada is much, much easier to understand as a layperson, which honestly most MPs are, than the Canadian Association of Accredited Mortgage Professionals. So it's just snappier, it's bitier, it's easier to promote social media. We, in very early days, changed the way that government relations was managed at the federal level. I think we had always, my predecessor was probably very skilled as an individual at managing some of those relationships, but there was not a lot of volunteer involvement, and by virtue of that, there wasn't a lot of optical activity in that arena. There's probably quite a lot of quiet conversations taking place. I think the members themselves really like to be empowered to be able to get some things off their chest once in a while to policymakers and government. So I think we've done a much better job of trying to make government relations a bit more accessible to the people that are enthused to take part in that anyway. The stress test was, so my timing was, depends how you look at it, lucky or unlucky. I started in January and the first stress test was announced in October. So I was just really figuring out who was who in the industry and who I needed to know, and who I could lean upon as subject matter experts and such, before I really did have to make the full focus of the association's activity government relations. I spent an awful lot of time arguing about stress tests on the insured side before the uninsured was introduced, and we've really done a lot of work trying to raise our profile and being almost an alternative voice to the CBA at the federal level, because I really think that's what we are. CBA definitely is a very strong representative of the Schedule A and the federally regulated folks. But I don't know if they have the same frontline consumer exposure that the broker channel does, or the businesses that are exclusively broker distributed as well. Definitely had a different perspective on what disenfranchising would be first-time buyers means for the market. So economically, I think we've done not a good job of making sure that we're trying to close the wealth gap by discouraging young would-be aspiring middle-class Canadians from owning a home, which is effectively what all of the credit constrictive policies across the last few years has achieved. I don't think it bodes well for us in the next 10 years. I think we need to really be focused more on trying to promote owner occupation of purchases rather than investment purchases longer term. It's a delicate balance, but it's the best way to make sure that individuals are in control of the wealth rather than a more concentrated few over time.
Right. Like, I think you and I disagree on this because we've had several conversations about this.
Probably why I was invited here today.
Yeah, because if everybody agrees on everything, then it's not interesting, right? So I always said that with the stress testing that the regulators put upon everybody was the greatest thing that ever happened to mortgage brokers in the history of mortgage brokering. Like, if I was a mortgage broker, I would have sent the biggest bouquet of flowers and the biggest thank you card, because all of a sudden a big percentage of people needed mortgage brokers to help them over this hump for structuring the deals, possibly getting an alternative loan, all sorts of things, right? That I thought it was fantastic. It just gave the brokers instant market share bigger market share, because my argument always is, I think the stats are something like 45% of first-time buyers use a mortgage broker.
Over 50, actually.
Okay, over 50, but then the average is 25, right?
I think we're about 33, 34.
Okay.
To our latest
So
surveys.
if you do the real math on that though, so over 50% on first time, and then averaging 33, that means second time buyers, it plummets dramatically well below 30 something, right?
Mm-hmm.
So why is that? It's because most mortgage brokers are incompetent at what they do.
So I wouldn't say it that way.
Okay, that's the way I say it, because I have the misinformed. I deal with them all the time, right? Like, and I talk. Some of them are brilliant. They know the business A to Z, know how to structure the loans, and there's some that you say simple stuff like loan to value, servicing, and they go, well, what are you talking about? Oh, we need to put a tag on their other property. What do you mean by a tag? Like, this is low-hanging fruit language, right? So, you mentioned something earlier about getting mortgage broker membership. I think it's in the best of everybody to reduce the number of members, increase the fee, increase the education, and have a more professional group. That's just my belief system.
I'm not sure I can share this interview on my social media. So I think the recording of those numbers is skewed, and so I actually don't even think that the data that's being presented is an accurate description.
Okay.
The reason why there's more than 50% of first-time buyers using a broker is probably because they don't have anything like the same reverence for the large brands that their parents did. But the reason why we have a lower percentage of broker-originated loans for second and third time is probably because the banks have got more entrenched relationships with people once they have a little bit more of an asset base over time. So they generally tend to just want to keep things centralized with one account group rather than taking to individual pieces of a portfolio, if you like. So I actually think over time we're growing in the right direction, and the folks that are at the bottom of that equity growth right now will become far more comfortable and actually experience the value of having independent advice and talking to somebody that has a broader scope of the market. To your point about the stress test almost boosting the prevalence of the broker in the market, I would agree with that.
Yeah, because there's probably a direct correlation to the number of people using mortgage brokers and the stress test being implemented are side by side, right?
For sure there will be.
Yeah.
But I don't think in and of itself that is the trigger for the growth. Even before the stress test was introduced, as we had a big growth in gig economy and more people sort of becoming self-employed, there was already a trajectory of folks that needed a little bit more underwriting sophistication than the checkbox that a specialist might.
But I think, listen, we're lucky at RiverRock. We deal with a lot of great mortgage brokers that are very sophisticated and understand what they're doing. And it is so nice to deal with them, right? They send you full packages. Conversations are short and sweet. We say to them, what do you need to sell it? They tell us, done, over. It's very efficient. And then, you do get the ones that it's like being dragged through a knothole backwards, the experience. It's so painful. And I just think that there should be a bare minimum level of knowledge to be an agent, and then another level to be a broker, right? Mm-hmm. And the bar is pretty low. That's what I feel. It just is.
For qualification, I 100% agree.
Yeah.
For all of the statement of priorities, white papers that FISRA and their predecessor FISCO and others across the country have issued, actually asking for our feedback on, trying to increase that base level of understanding of the day-to-day operation of a broker or an agent or a sub-broker or an associate, depending on where you're in the country. It makes so much more sense from a consumer protection point of view. They tend to be, as regulators, very focused on ensuring that you understand sort of chapter and verse of the legislation and regulation adherence you're supposed to act in accordance with, but they don't really provide any examination requirements anyway for how do you underwrite a mortgage, or how the risk versus the interest rate correlate.
Right.
And a little bit of really basic understanding of just discounted cash flow, present value, and the cost to actually go through a foreclosure would probably be tremendously valuable to everybody in the marketplace.
Right.
I think the reason why you really enjoy the relationships you have with your brokers and agents is likely because they were all either tenured enough that they were underwriters before they became brokers, or they've been brokers for so long that they may have just felt an awful lot of pain along the way and learned as they took their lumps, but they're sophisticated enough when they call you now to say, here's a risk, Nick. Here's the parameters for here's the equity, here's the income.
It's interesting. When I first got into the business, which was 1986, most as a lender, most of the brokers back then came out of the finance companies, right? Because there was a lot of finance companies back then, and they knew how to. Not only did they know how to underwrite the risk, but back then, a person that worked in a finance company, not only would they have to underwrite it and approve it and sell and close the client, but they'd also have to do the collection. So they understood cradle to grave what that meant, right? So these guys, when they became mortgage brokers, were very sophisticated and they got it, right? A lot of times they would say, let me get on the phone to the client, just let me know, I'll solve it for you, right? And then what happened was in the 90s, all of a sudden finder's fees started being introduced by lenders. To mortgage agents and brokers, and then all of a sudden, you did a mortgage for $500,000 and you got a point fee. That's pretty good. You do 2 deals a month, you're making a decent living, right? So it really changed. All of a sudden, it really changed the dynamics because there was a mass flood into the space, right? Like, I just think that I've obviously liked the business. I've been in it for my whole life. And I think mortgage broker, and it's all been driven by mortgage brokers, right? So I think mortgage brokers are great. I just think that you're helping people with the largest investment, the vast majority of people, the largest investment of their lives. Why aren't you more educated on that, right? And that's where my direction goes, right? We both sit on the advisory committee at FISRA together, and it sounds like they're very geared to make some big changes. What are some of the changes that you see happening in the near term?
Well, they've been, as you know, they've been very, very focused on private lending activity since they were created. You almost could argue that FISCO was dissolved really because of a lack of attention to some of the headline-causing instances that took place at the time. So definitely their priority out of the gates has been ensuring investor protections in some of the syndicated mortgage activity. There's a transition to the OSC for some of that. And we had been arguing for a while that there's a real difference in activity between arranging for a mortgage and raising the capital to invest in the mortgage. And the same license really should not permit you to do both things. You're sort of servicing both ends of the transaction, as it were. And there's almost an inherent conflict of interest if there isn't some kind of Chinese wall in the shop that's arranging that stuff, in our opinion. Now I can hear there'll be arguments about smaller communities and individuals that are sort of have to do soup to nuts just because of populations, and I understand that. But I think in most of the urban areas where the vast majority of the population of brokers exist, it really only makes sense that you would have a differentiation, whether it be a separate license class or a different ticket or a restriction that exists that would require you to have a base level of investment knowledge, understanding, and ability to counsel an investor about the risks of putting money into a mortgage type of investment. If you are a practitioner who is placing mortgages all day long with established lenders, that can be very complicated, but it's one side of a portion of the interest, and you're committing one individual's finances. If you're arranging the raising of capital from others and then managing the distribution of payments back to somebody else, there's an administrative class license that permits some of that, but it's not really enough of a level of differentiation or education from that perspective. So all of that said, I anticipate that there's going to be an increase in the expectation of the minimum level of knowledge for licensing. It will probably take 2 or 3 years, if I'm honest, before that comes into play. I know that they're investigating the idea of a separate qualification, however they structure it, for that raising of capital permission. We're hugely in favor of that. If they put something in place like that actually prior to the OSC transfer, it may have simplified things, because we could have had one regulator looking after the whole space rather than two at the moment. But we still think from a consumer protection perspective, even for those more simplified, non-qualifying syndicated mortgage investments, as they call them now, having that minimum level of understanding and a ticket that says the regulator knows that you have some study about risk and return and reward to counsel your investors in is good news.
And do you think that Mortgage Professional Canada should put out like what they believe is their code of conduct type of rules, and then like, for example, like I know you guys have them, but a little deeper, where you see a lot of brokers advertise like they're a lender, but they're not a lender. They're just going to co-broker the deal, right?
Right.
Shouldn't there be like that? To me, that's a negative to consumers, right? Because they don't know, like, how many times do you refinance your house or get a mortgage in your life, right? Like, you're not something well-versed, and you don't expect the people to be. So when somebody's advertising as a lender, they think, oh, I'm going to deal with this guy, but he doesn't have, I always say, if you don't have money, you're not a lender, right? You're just a guy. Like, it's a simple definition.
It is.
Right? If you can't write a check, you're not a lender.
Right. We've had a code of conduct at the association almost since inception, and we historically we predate a lot of the regulators across the country. We were previously CAP, and before that there was Symbol.
Right.
And we had an ethics committee, and we actually had an on-site investigator who would conduct investigations. That's become far more difficult for us to do, actually, as now every province has its own regulator in place.
Right.
Because we almost walk into a liability if we find fault with somebody's conduct, but the local conduct regulator doesn't.
Right.
Then we are effectively attacking somebody's professional reputation when the individuals that are supposed to be issuing the licenses find no fault.
Right. And the other problem too is that they don't have to be a member to act as an agent or a broker, right?
That's right. Yeah.
So they can turn around and say, okay, I quit the association.
Yeah.
And they still do what they do.
Right. We're not a licensing body. We really
right.
have teeth that way. That said, though, the Mortgage Brokers Regulatory Council of Canada, which is the sort of collective group of all of the regulatory people, FSRA, FICOM in BC, Manitoba Securities Commission, New Brunswick, they collectively have put together now a code of conduct that they want the industry to adopt. It's effectively a plain language description of what is required collectively across all jurisdictions within their own regulations and legislation, but it's much more consumer accessible, so somebody, layperson, could read it and understand what conduct is supposed to be. And they've asked us at the association to mirror our code of conduct to match that as well. So if our code of conduct and the regulators is lined up, it actually makes it much easier for us then to be able to assist with correction of practices, or send a slightly stronger worded letter that says, we understand you're doing that, it's in contravention of our code.
Like, do you think that'll get better?
I think conduct in general will get better. I think it's actually already gotten an awful lot better. I'm saying that. I'm very fortunate in that Mortgage Professionals Canada tends to attract the people that are full-time mortgage agents and brokers to its ranks. We have something like a 55% penetration into the full licensed originator marketplace. We've just cracked 13,000 individual members, and there are something around, I'm going to guess, 25,000 licenses issued across the country. Because we have full-time practitioners and people that have chosen to make this their career rather than folks that would be potentially part-time involved in it, or write 3 or 4 friends and family deals a year, we don't run into an awful lot of issues within our membership of people who are not conducting themselves appropriately. And they tend to belong to the other thing that assists us with that actually is we have a membership requirement that everybody within the brokerage belongs. cannot, as a sole practitioner, sign up. The whole brokerage has to be on board.
Oh, okay.
And so because of that, we tend to get management teams making the decision on behalf of a group who kind of understand the value of the education, the government relations and such that we do. And that speaks culturally actually through the organization most of the time. So our organization and its membership are probably not the folks you generally would have an issue with in your practice.
That's excellent. Now, on the mixed space, because obviously that's my space,
Right.
how do you feel that's been managed to date, as far as licensing goes and all of that?
Do you need one?
Do you need one? Well, technically, no. That's part of the problem. Like you can get an administration license from FSRA, but technically you don't need one. Right. So why do people do it? To give themselves credibility? Yeah, to give them credibility?
Probably. There are some functions actually within, I guess depends how the business is structured, but if you've got somebody that's administering the flow of funds at a brokerage because they are lending their own capital, that individual might never deal with placement of a mortgage per se, but might well be making phone calls to collect money or distribute funds. So I can see the need for that.
Do you think they'll get to a point where you have to have a license to be a MIC?
Potentially. That's a really difficult question to answer in not a lot of time, though, to be honest. I would not want to get in the way of the free flow of capital in the marketplace, and I don't think the regulators have much of an appetite for that either. But that said, there are lots of parts of the world where you cannot issue money against the property or security in the form of a mortgage without having approval from the local government to do that. There is no private lending activity in the UK, for example, because if you don't have a permission from the Prudential Regulatory Authority to do so, you cannot issue a mortgage loan.
Right.
And so that does remove some capital, but it removes a lot of problems for the regulator as well.
That's right.
As you can imagine. It's difficult to unwind a number of businesses, though, especially given our economy. So much of it is made up of small businesses, and if there are folks that have decided, if you think about the number of construction projects in the city and outside that are funded by private capital because some of the larger banks and institutions just don't have an appetite for that risk.
Yeah, but if you look at the people that run those funds that do that, they're pretty sophisticated.
Yeah.
Right? Very sophisticated guys, right? Or women. You look at a hedge fund or a mutual fund. There's licensing that's required, and these people are pretty sophisticated that run these things. They make mistakes, but for the most part, they're sophisticated. When you look at the mixed space, I don't know of another business where you can know absolutely nothing about it and raise capital and lend it out and know nothing. Like, can you think of another business?
Not in that sort of arrangement, but only probably because I don't have exposure to it. Lloyd of London is effectively a whole bunch of rich people that are throwing money against all kinds of risk, whether it be financial products or insurance.
Yeah, but they've got a big back office that's doing a lot of modeling, and
some of them do. It still ultimately rolls up to a bunch of rich folks that make up a syndicate, though, who've hired an underwriter that professes to be the expert in whatever it is that they're committing the capital to. So the models aren't necessarily unique to Canada, but I don't know.
Like, I just think that, we at RiverRock here, we've purchased portions of portfolios from people. We've been approached to buy some mix, which we haven't been able to put something together, because a lot of times when you look under the hood, they're not compliant, right? From to run a mix, there's certain rules to raise money, to be eligible to collect RSP money or tax-free savings account money, and these people aren't eligible, but they're taking that money in, even though their fund may not be eligible to do that. There's lots of things that I see that I go, well, you're non-compliant. Like, I can't help you if you're non-compliant, because now if I buy you, I take on your risk, right? But how? And then when you talk to them about the rules, they don't even know the rules, which I find always kind of interesting. Like, how do you start up a business and not even know the rules?
I guess you wait to get audited by the CRO.
Yeah, but how long does that take? It takes forever, right?
Yeah, or not at all. Maybe you wind down before they even find out who you were. That's
Like the thing is, like the last 10 years in the mortgage business, if you're in the lending business, the market's corrected most of your mistakes, right? It's been, the last 10 years have been pretty, there was that blip in 17 when the values dropped the second half, but other than that, it's been a pretty decent ride, right? And so everybody just thinks they're brilliant, even though they don't know what they're doing. Not everybody doesn't, but a lot of people don't know what they're doing. And they're, and then eventually something bad is going to happen. And I think investors say to me all the time, what do you worry about? And I always say the same thing, headline risk, that some MIC blows up spectacularly, takes a big hit, and then all of a sudden my investors get rattled, and all of a sudden getting new investors in becomes more difficult and challenging because they're rattled by what they're reading in the news, right? Which is a concern. Mm-hmm. Like I can't think of another. You got to have a license to fix a car. You got to have a license to be a plumber, an electrician, but you don't have to. A hairdresser, yeah, you got to have a license to cut hair. But you can basically lend money out. If you can convince somebody to give you their money, you can lend it out and do whatever you want, right? And I see crazy lending going on. Like I get paid out on stuff, and I say to them, "You're never going to be able to pay me out. You got to sell the house." And then they pay me out, and I think that is ridiculous. Like thanks, but like that was ridiculous,
At least you're not holding the bag.
Yeah, exactly.
I don't know what to suggest there, actually. In the immediate short run, I'm not aware that there is a investigation underfoot at any of the regulators that don't currently already require licensing to implement something like that. And I don't want to suggest that. I mean, the large brokerages themselves could probably issue some sort of accredited lender list that would provide security to the folks within their ranks that we've checked out this firm and we know that they're operating above board, and things will work out fine if there is ever a problem. There's an awful lot of independents out there, though, that are still also doing really good business with very strong accredited lenders. I'm not familiar enough, honestly, with the regulatory structure. It's more a tax structure legal requirement than it is a practice requirement. Right. I don't know what to suggest to ensure that nobody gets burned or gets their hand cut in a cookie jar. Yeah, that's just going to have to just play out. We have a group errors and omissions program through the association, and then like our loss ratio is for sure driven by private deals that didn't go well. And is that the investor or the borrower suing? It's almost always the investor. The investor, right? Yeah. And would that be where the broker goes directly to investor and says, I have a deal for you, and then they put the money in directly? Is that how where the problem happens? So I don't have the files in front of me, but traditionally, any time an investor in a private deal loses money, they'll name everybody in a suit joint and severally, because it really doesn't matter if you're 1% or 99% liable. Awards are just paid by whoever's got the deepest pockets. Right. I'm sure you felt that pain. So while brokers may not have done anything wrong in the transaction, they may well have provided all of the appropriate paperwork and ensured that the investor knew fully, or at least had the tools to fully understand the investment, even if they weren't smart enough to. When things go wrong, even though the suits may not pay anything, there's still a defense cost that is covered by the insurance policy and time. And so the loss ratio of the insurance portfolio that we have is really driven by the defense costs for an awful lot of what are, I won't say they're frivolous, but they're a little bit baseless oftentimes, of investors trying to recoup the losses because they put their money against a poor quality borrower and didn't understand it. Yeah, but a lot of times the agent or the broker dealing with the private individual doesn't really understand, like they've never serviced a loan before themselves. So if the deal goes sideways, they wouldn't know what steps to take anyways. So, because there's always downside to everything, right? And, you hand off this loan to this person that knows nothing from nothing about lending, and then all of a sudden the deal cracks. They turn to the broker and they go, what do I do? And they go, I don't know.
I've never
Much to do with that.
seen that happen. You know, like I'm
I guess
just
you take them to court. I don't know.
yeah, like what do you do? Who shall I talk to? Right? Call your lawyer. Like, and then not just because you're a lawyer doesn't mean you know how to efficiently start a legal action on a house, right? Or
Right.
more. You know what I mean? Like, it's a skill set,
For sure.
right?
And then, like, there are real people skills involved in that stuff too, as I'm sure you will have experienced firsthand. There's an awful lot of emotion involved in having to go through that process.
Yeah, see, I'm lucky that way. I don't have any emotion when it comes to this stuff.
Oh, but you're closing on Will.
Yeah, but it doesn't bother me. To me, it's a transaction, right? Like I'm working for the investors, right? So my job is to them.
Yeah.
So what I feel is irrelevant.
Okay.
That's how I look at that. Like when I'm personally involved in somebody not paying their mortgage and we're starting a legal action, and it doesn't matter how I feel or anything. It's not relevant to what's going on. My job is to manage the file, to minimize the risk and any potential loss. So I just follow the steps and do what I have to do. Not everybody's built like that, right?
Right.
Some people go, oh my God, this is horrible. Like I feel so bad for these people. I don't look at it through that lens. But not everybody can do that.